This is the market makers trying to get you out of your game. I'm going to end up doubling or tripling my money. So there was a lot of confirmations. You're going to take that trade, aren't you?
Hey, it worked last weekend.
That's 100% return. You just made $500. 3 solid confirmations.
I got that trade Sunday night. It was awesome.
You never want to use hope, guys. No hope. Hope is not a strategy. Today, I want to talk to you about the memory line a little bit more because we had a beautiful trade off that memory line. I find memory lines are great for 2-tick trades. If you want to jump in and scalp 2 ticks, boom. And there's nothing to laugh about. There are people that will do 2-tick trades because remember, if you're playing with large contracts, 2 ticks is a lot of money, right? For every contract, 2 ticks is $25. So if you're playing with, let's say, 10 contracts, that's $250. And it happens in seconds, boom. And the memory line is great for that, especially if it's a big one. And that was one that we were watching, my partners and I, and it worked out beautifully. Unfortunately, I didn't take the trade, but my partners did. I also want to talk about using the Fibonacci, especially when you're doing options, because on Tesla, I was trying to figure out, shall I get out of the trade? Because I got in at a strong line, but it went against me. Now, because it's options, it's very forgiving. So I think I have until March 7th. So I have a week left for Tesla to give me some money. And that's why you got to keep your cool. When you're in a situation where you're taking a loss, you have to look at everything, take a step back. And that's why I'm always talking about the personal growth, because if you don't take a step back and analyze the situation. So in my case, I was like, okay, Tesla is going against me. That's fine. What can I do? And I quickly used the Fibonacci to say, okay, if it goes beyond this point, I'm out. And it did not. It turned around at another line below my brick wall and it made its way up. And so that was one of the things. The other thing I justified by saying it hasn't hit my 11% Fibonacci yet. And I still have a week. So I am going to stay in this trade because I think I have a chance to make money. And I'll talk about that, those 2 things. Before I do it, I would just love to hear from anyone about their personal growth, because like I said, that's the most important thing. Whether you fell off the horse or whether you're doing it or not doing it, please share. Anyone.
My horse was on hold for a week and a half, so I'm back on the horse now. So
Giddy up. Yeah, gotcha.
Yep.
It's
that
fun.
one.
It's fun getting off that horse sometimes.
Yes. I totally agree with you, Brian.
Yeah, no, I absolutely agree. When you're on vacation, hey, you know what? If you want to just take the time off, because it goes back to what I've said before. Personal growth, you don't want it to own your ass. You want to own personal growth. When personal growth owns your butt, you're in trouble. And I've seen that, by the way. My friend Nick, who has helped me a lot with working out, he's got a good body and everything, but personal growth, and his wife is someone that has confided in me that she's worried about because he's so strict with his diet. He's got an addictive personality and it's creating issues for him and his wife. The way things has to be this way, and he's owned by working out. You don't want to be owned by working out. You want to be committed, not attached. And when you're the owner, you can say, you know what, fuck it. I'm going to take the week off. I'm on vacation. I'm not working out. In fact, you know what? I'm going to drink. I'm going to fucking drink every day for the next week. And when I come back, I'm going to work my butt off and get it off, right? And that's okay because you own it. Now, that doesn't work for me personally. I don't like drinking that much anyway. And I always watch what I eat. I'm always at the protein section when I do go to a resort, and I'm always eating the protein first. And that's how I live my life. And I'll still go to the gym, but I will indulge in desserts. I will go crazy on the desserts because it's right there. That's my weakness, right? But I own it. I own that situation. I'm deciding that that's what I'm going to do. And when I come back, no more dessert. I know I'm going to have cravings because when you have sugar, the cravings will last maybe for 48, 72 hours. So I have to be prepared for that. When I come back, I'm going to want more bread or more pasta or more rice or more sugar, but you want to own it. So yeah, thanks for sharing, Cord. Anyone else? If not, we'll move on. Let's jump into it. As mentioned, I want to talk to you guys about memory line right here. And in fact, it came down. This blue line was an 88% Fibonacci line. I didn't take this one. I was not in front of the computer. I didn't take this one, which is a little disappointing, but but this helped me to realize that my Tesla stock was good. What do I mean by that? Well, this was such a strong area. That was part of my decision making. When I saw the S&P futures heading up, I said, okay, I'm in good hands with Tesla. And this was a big correction zone. So can you guys see how I use the S&P and as a gauge for other things that I'm doing? Does that make sense?
Yeah.
Okay, good. Because if this wall here had crashed, I would have exited out my Tesla. I would have said, no, screw this. I'm not taking no chance, right? I would have taken a little bit of a loss, but I would have exited out. So that was part of my thinking with Tesla. And so let's look at this area here. And this is just a Fibonacci extension. The 113 was right in that area when it came down a second time in the afternoon. So in the morning, it gave us this beautiful trade. And this green line is the memory line. It was just bang on. And then in the afternoon, it passed this blue line here, this thin blue line is the 88%. And I'll show you guys in the big picture. And it came to that 113. It passed the 113 a bit. But had you done a reverse Fibonacci, you would have gotten confirmation that it's, and I believe, what was it? Was it the 50? I think it was. The 50 here, you can see it. 50-50, and it came to that zero right there. Let me just open it up, right? The reverse Fibonacci, right? Using this. And right here, I've got an area where the market came. I like to anchor things because this becomes a very strong area. And then it also hit the 11% right there. And then you can see the hit there as well. This one was pretty close. And so, right here. No, that was after the fact. Sorry. Yeah. So you can see my thinking there. I did not take this trade as mentioned, right? But like any other trade, I often go back and I highly recommend guys, go back when you see the market do something like this and see, hey, what if I could have predicted this trade? Or could I have predicted this trade using my tools? Because it will give you confidence. And I mean, with the Fibonacci extension, this green one here, most of you don't have access to it. As I mentioned, after 6 months, I'll give it to you. I want you guys to put the time in. Or if you guys show me that you're taking a lot of trades, I will give it to you sooner. But it's just my way to make sure you guys are putting the time in. Either way, you're going to get it. You can get it sooner or you get it later. But these two trades happened yesterday and it worked out beautifully. Actually, let me check something. Did I just see maybe a trend line. I didn't see this earlier. Let me see. Would that it's not bad at all. Not bad at all. So we have a trend line in that area. We have a 113 in that area. And we have a reverse fib in that area right there. And it was just below this 88% Fibonacci line. So there was a lot of confirmations that this market might retrace upwards. And so with something like this, if the area has a big potential for too big of a stop loss, right, from the 88 to maybe a trend line or the 113 or whatever, well, maybe just go in with one contract. Let's say you normally trade with 5 contracts. Go in with one contract and put a bigger stop loss. Put 20 ticks stop loss. If it goes against you, you lose $250. But if it goes in your direction, if in fact this is the brick wall that we are expecting in this area, right? And you take that trade, well, let's look at how much it went up. If you're playing with $500 and you took that trade and you're expecting it to be a brick wall, and the thing is, when it's jumping around like this, by the way, this is also a very important point. This is the market makers trying to get you out of your game. They're going to shake you up. They're going to shake you out. They're going to put fear inside of you and they're going to shake you out. But if you take that one contract and you go up, like just from here, 58.48 to 58.58, right here, just to that level, just that there, that's 100% return. You just made $500. You go up a little higher, $1,000. And this was all done in the afternoon. Well, not quite the afternoon session because it came down at around 124. And by the way, just so you know, that's when the market makers own this zone or this market. So that's when they will be there trying to knock you out of your game. And that's why I'm saying after 2 o'clock, it's always better to trade. And look, at 2 o'clock, it was just a nice hit when it came to that area there. the second time to this area. If you look at the time at the bottom, 2 p.m. And so you guys will get a sense of when the market will work in your favor, when the market makers, right, between, let's say, 11 and 2 p.m. for those 3 hours, they will try and throw you off your game. But if your line is strong enough, right, stick to it. Like I said, put a bigger stop loss if you need to. So if you were to get in at the upper limit here, this blue line here, this thin blue line is the 88%. You know what? Let me make it thicker. Okay, nice and thick. So that blue line there, that's the 88% Fibonacci. So if you were thinking of taking a trade and you've got maybe a trend line or whatever, from blue line downwards to the trend line, right? It might be 48. Yeah, it'll be like 3 points or something like that. That's a huge amount of a stop loss if you're playing with 10,000 for me, right? This is perfect scenario where you might say, man, I love this area. And if it does go, because it's such a big brick wall, when it does go in my favor, I'm going to end up doubling or tripling my money. And because the lines were already here, I wanted to zoom in on this. I'm going to erase these lines now, and I'm going to look at the big picture. If I don't remove it, it's going to look very noisy when I zoom into the big picture.
What time frame are you on? 1 minute?
I'm on the 1 minute right now. So I'm going to go to the 4 hour. Okay. So on the 4 hour, you guys can see, right? Look at this beautiful memory line, right? That was from July of last year. And you had an 88% Fibonacci line, right? You guys see the Fibonacci from here to there. And so when you look at it like from the bigger time frame, doesn't it make more sense now? Would you guys agree?
Yeah, definitely.
So that's why I'm always saying, zoom in or zoom out, but get all the information in this area, right? It's easy to be myopic. And if you had just seen this, you would have missed these beautiful lines right here. You would have missed it if you didn't zoom out. Would you guys agree with that?
Question I have for you, because I'm
Yeah.
still very much of a novice at this. Where do you, what gives you the insight to start your memory line on where you did back in August, I believe it is? What made you decide to take that
Good
point?
question. Let me explain. Let me go back to the 4 hour. Now, if I'm trading in this market here, actually, I'm going to remove all the drawings here. I'll put it right back. If I'm trading in this market, the market is coming down, right? I have to go and have a look at what's happened in the past. So I've got a memory line here. I've got a memory line there. I've got one there. I've got one there. I've got one there. I've got one there, right? I've got a whole bunch of memory lines in that area there. So when that market is coming down, I have to decide, is it going to come to my area? Now, look how much it went. It went from here all the way back up to that area Friday afternoon. It was a big jump, right? That's
100 points.
Yeah, right. And so you have to be willing to look, I would say 100 points in whatever zone you're looking at, 100 points either way, right? So if you were here, you would want to look at what the market could do in that direction, what the market could do in that direction, and put your memory lines in. Does that make sense? Right?
Yeah, that part makes sense to me. But I guess my mind is still trying to wrap around how you got to August and you used it as your memory line.
Oh, I did.
When you first opened this up, that's where it was sitting. Was it not? Was it not on August?
You mean right
around
here?
the July? Yeah, exactly.
No, but I don't care what date it is. That's what.
Oh, no, I know that. But wait, what made you decide to go all the way back to say, okay, here, this is where I'm going to start? Do you know what I mean?
No, I'm stuck.
Or am I losing it?
I don't know, but let's start right from the beginning again. So when I'm analyzing the charts, I will put my memory lines. I could care not that it's in July. I just gave you information.
Okay, now stop right there for 1 second.
Okay.
Now this is where that's what my curiosity is how you, because when we first started this particular episode as we're doing right now, that's where that memory line was. Like, how did you decide to create it from there on? What made you, do you know what I mean? You understand what I'm trying to say?
No.
Okay. See, because you have your memory line right there, the 58, 55 for argument's sake, but it actually tags you. It tags that that 1 point there in July And that's where, and more or less, this is where, yeah, exactly. This is where it tagged, and then you use that as your memory line. Now, was it just by chance it happened to hit there in July, or just you know what I mean? Or am I not making any sense at all?
I think he's wondering why you went back to July to see it.
Exactly.
And I think the answer, is you can use any memory line from anywhere.
Okay.
Yeah.
Is that the answer?
Let me explain again. See, if my trading zone is right there, I'm going to go back and I'll put memory lines. Let's do it. I'll put a memory line there, right? Because we have that there. I'll put a memory line right there. I'll put memory line here for that area there. And I'll put memory line right there. I'll put a memory line right there.
Okay.
So knowing that, go on.
The memory lines you're putting there are just the points that are on the exact same, like on the same line. That's why you're calling it a memory line?
A memory line just simply means, like, in the past, right? Something happened. The market turned around here in a big way. The market turned around here in a big way. The market turned around here in a big way. And when that happens, these areas become extremely important. Okay? Some of them are more important than others. Some of them are not. And if you have areas where the market turned around, like maybe these two, if they were like bang on, they're pretty close, that area becomes even stronger, because now you can almost use it like a trend line, right? You can almost say, okay, let me use it as a trend line, because the next time it happens, the market might bounce right off of it. But not to confuse you, my job is just to go back and just see where the market hit, because those lines are very important. And then I put it on my chart. And then when I'm doing my Fibonacci's, then those lines, if they correspond with any of my Fibonacci's, so like say this one here, if it corresponds with any of my Fibonacci's, it makes it even more powerful. Now I've got two confirmations. That area is going to be a strong area. And so when I put all those lines in, I could care less whether it's January, February, or 10 years ago. My job is just to put in all these memory lines. And then when I took that Fibonacci from this low to this high, I wanted to see where could it possibly retrace. And that ended up being close to the 88% Fibonacci line. Right, let me put that there. Almost bang on. So I knew that would be a strong area right there. I can't remember if I did another Fibonacci, but I would have definitely put that out there to see what could possibly happen. And let me change the color. I would have done all of this work ahead of time, and I would have maybe put a Fibonacci right there as well to see if I have any confluence. And look at this. Actually, I did have this one. That was another reason why. You can see the 50% from this area to there, right? So from here to here, I've got three solid areas, 50% from a very pronounced. Now, this would have made me a tiny bit nervous because I had a 38 just below. But to have three solid confirmations, right? A memory line, a 50% and an 88%, breaking that, even if it broke it and it came down, I would have just taken a little bit of a loss. So let's say I was playing with one contract and I took a $250 loss. I would then know, if you break this area, if you break that brick wall, you are not going to break that yellow line. You're not going to break this 38%. And I'm going to wait for you and I'm going to ride you up. So Gord, I went off on a tangent there. Getting back to your question, does that make sense, what I just said there? Or
well, now it makes more sense. I mean, obviously, as I'm looking at your lines, I can see where it hits one and it moves all the way back. Okay, no, I do understand now. I understand better than I did before. That's for sure. All right.
Okay, great. This is important, guys. The memory lines. I have a partner of mine. You know the way I love trend lines. He loves memory lines. That's all he talks about. Memory lines, memory lines, memory lines. And he does really well. That's the first thing he looks for. For me, it's weird. I look for trend lines. That's the first thing. For you, you're going to look for the 38%. I have another friend who has a 45%. Don't ask me. I think it's the weirdest thing. But he has a 45% on his chart, and he tried to explain it to me, and I'm just like, listen, don't confuse me. I don't want to. This is one of my hedge fund partners, and he makes money off the lines, and it works. And thankfully, when he does have a 45, it normally corresponds to like an old 38% or old 61%. So I'm like, I don't need no 45% on my line. I can see how you're able to hit it. It says 45%, but it corresponds to an older 61 or a 10-second chart. It corresponds to a 23% or something like that. So it works out. But when you guys are doing your analysis, you're going to see different things. So just be with it. And whatever you're seeing is okay. And whatever you start with, it's okay. I just want to make sure you guys get memory lines so that you can use it in your analysis.
So it doesn't matter what frame you're on, right? Either you're on a day, an hour, 15-minute.
Yeah, let's look at it. So that was the 4-hour time frame, right? And you can see the memory lines are spaced out. They're way bigger. But what about this memory line on the 1-minute chart? So yeah, thanks for bringing that up, Brian. So there you go. Now that becomes an area where if you have a Fibonacci, let's take a Fibonacci. Let's see what happens from this low to that high. Go from here to there. And we have the 50% right there and that memory line. So now in this area, I have two confirmations that something could potentially happen. Now, this is a big stop loss, or it would be a big area. So I might decide I'm not going to use this. But what if you end up getting maybe something like this, and you decide, let me see if I can get another confirmation. Maybe you get a trend line from that point to that point there. And if the market starts to come down, you can maybe use the trend line here. So rather than going all the way to this area here, you might end up having 3 confirmations here, a memory line, a trend line. Remember, this part here, I just made it up. I'm not saying that's what it was happening, but if it does, you will use that information to zoom in on where that potential trade could be. And maybe what you could do is you could take another Fibonacci from here, from this level, all the way up there, and see what happens. So let's do that. So if we took a Fibonacci from there, from that level, change the color. So now look at this. We have an 88% right on top of the 50%, below a trend line. If this market comes to this line, I got 2 solid confirmations, an 88% and a 50% that market could turn around.
And what's that number?
You're going to take that trade, aren't you?
Hey, it worked last weekend. I got that trade Sunday night. It was awesome.
Yeah, that was a good call, man. Good for you.
Yeah.
Right? It's a shame I was out. So yeah, 5909.50.
59.09.50.
5909.50.
Yeah.
Right. So if it comes down, right, we have 2 confirmations. So now what Brian is going to do, or whoever is interested in taking that trade, see what the market does up here. And then whatever it does up here, right, you'll use it. Maybe you'll use a reverse fib or a trend line or the fib extension, for those of you that I've shared it with, to pinpoint where that market. And the whole idea, the reason why we like it on top of each other, a couple of reasons. Number one, it's telling us it's a strong area. It's telling us that that area, the 88 and the 50, is very strong. And so if it's telling us that that area is very strong, we could literally go in and put our stop loss right underneath. So we're not putting a lot of money at risk. If it goes against us, then chances are it's going to this line or it's going down here. And if it does, well, then we'll take the tiny loss here. And then we might have, if we have 3 confirmations on this line, we jump in again. Or if we don't have 3 confirmations here, maybe we have 3 confirmations here. You can see this blue line is a 76% Fibonacci line, and we have a 61 right there. So if we take a loss there, a tiny loss, we can jump back in, put our stop loss under there, and take that trade here and write it up. Can you guys see how simple this is or no? Even if it's not necessarily simple for you yet.
I'm understanding, which is
Yeah.
good.
Yeah, trading levels to levels and making sure you've got three solid confirmations is the trick. Three plus solid confirmations. Okay. And if you want more confirmations, then maybe go to the 10-second chart and see if you can see anything there. Do we see anything here? Let me see. Do I have anything? Well, I do see something here. I see a trend line. So if this market on Sunday night, and it's quite possible it could gap down, you could see something like this, hit this area, and that's what happened to Brian. It did the opposite. It shot up, and Brian jumped in and took that trade. So if it does end up coming to that area, then take the trade. Take the trade. In fact, look at the time at the bottom, 6:20, 6:30 on Sunday. Approximately the same. That was the same time Brian took that trade,
Yeah.
right? Yeah.
And Mark, could I ask
Maybe
a
that's
question?
that's a trend time.
Yeah. Well, no, like when you put the work in, guys, and you have a tiny stop loss, take the frickin' trade. Like just keep a tiny stop loss, take the trade, take the trade. We have a memory line over here. We've got 76 and 88 right here, or this one here. Could it come to this line? It could. It could come down, break that trend line, and come to this area here, right? And bounce off of this one, and not this area here. And if it does come down here, remember, we only have two confirmations here. So you need a third one, but you might get a third confirmation from this information, whatever the market does there. Okay, someone was asking me a question. Sorry about that. Go ahead.
No, you're fine, Amar. So at that 622 mark where the memory line and the upward trend line conject, and let's just say Brian hypothetically got in there, how far would he ride that up?
Okay, good
Like
question.
to be safe?
Yeah, okay. So with regards to take profit, you'll get the information on the video, but I'm going to go through it here again because it's a good question. And I want to make sure. Sorry, Ebony?
Isn't it at the 11%?
That's right. Exactly. Or you can go higher, or you can have a runner. So let's go through all the different scenarios because this is important. And I like to go through it because most traders and most people that I speak to when they come into my mentorship program, that's the one thing that I can say is probably 70% of their failures. Not taking enough profit or getting greedy and thinking the market is going to the moon today, and it doesn't. And they fail to take profit and lose it. So let's assume this market comes down and hits this area here. Let's assume that's our thesis. Well, then we need to take a Fibonacci from here because we are saying the market went up and now it's going to retrace. And we are saying it's going to retrace at, let's say, this 50% line, right? Because this yellow Fibonacci is the Fibonacci. And now we want to know how much it's going to retrace back. So we want to now do our homework ahead of time. So we would take a Fibonacci from this high to, let's say it was this area, or maybe let's say here, let's say it was this area. Let me change the color and I'm going to make it nice and thick.
Don't you just put it on, don't you just put it on the number that you're hoping that you're going to take the trade at? Yeah.
That's right. So it might be this.
Like I got it at 59.10 right now.
Yeah.
Give or take.
Yeah. Exactly.
And I'm gonna go 3 points below, right?
Okay.
Because that's my stop loss.
Okay, good. All right.
So I'll have a stop loss at 59.07.
Okay, good. And that's the way Brian trades. For me, I like a tighter stop loss, unless, of course, I'm not sure, and then I'll put a bigger one. But just stay consistent, guys, and think it through, right? And we've talked about stop loss before. We'll talk about stop loss again. Watch the videos on stop loss. But let's get back to this here. So you've decided your thesis is this point. You want to make sure that when that market comes down, and let's say it hits your point, you want to make sure when it starts to go up, and it's going to make you pay for it. It's not going to go up necessarily. Sometimes you get lucky and it's like one big thing and you're like, woohoo, right? You just make it. No, it's going to make you sweat most of the time, okay? It's going to make you sweat. But if you jump in here and you have a tiny stop loss, you can afford to breathe a little bit. Or if you have a bigger one, that's fine, because a bigger one with a small amount of money works as well. But if you've got solid confirmations on this area here, then what you need to do is just, and some people will do this, they'll have a bigger stop loss because sometimes the market will do this. Whoop, it'll just spike down, take you out, and you're like, oh, man, right? And so for me, that happens a lot because I have a tiny stop loss. For those of you that want a bigger stop loss, then that's fine. The cardinal rule is do not move your stop loss outwards after you've decided, okay? That's the only thing I say. You move it inwards. And in fact, if I take this trade and this trade, the market comes down to my area here and starts to go up. By the time it gets to this 11%, as Ebony says, I'm out before. Do not wait until it gets to the 11 because sometimes it'll get to the 11 and tank down and you're like, I could have made more money. You want to make sure that when it comes down, before it gets to the 11, you exit out. Or if your stop loss is here, you move your stop loss to where you entered so that you cannot lose money in case the market decides to come against you. Or you take some profit here, right? And when would I take profit there? And when would I have a runner to take profit there? If this is a strong area. But if I think the market is just doing a natural correction to actually continue downwards, then I want to take my profits. I want to take my profits right there. But I love using runners. So if you're using 2 contracts, for instance, or 10 contracts, maybe here you get out with 5 contracts. You've made a sweet profit. By the way, right, from here to there will be a 70% return, 59.10 to 59.17. Each point is a 10% return, depending on how much you're playing with, of course. So if you're playing with $5,000, okay, 10% return would be $500. Sorry, what am I saying? Not 10%. 70% return on $5,000 is $3,500 you'll make going there. So you're playing with $5,000, but here's the best part, right? The $5,000 is not at risk. It's just a portion of it. For me, I like a tiny stop loss. So I just put a tiny portion of it at risk. So for me, it might be 5 ticks. Generally, that's what I look for. But obviously, I will look to see if I have anything here where maybe it's at 7 ticks. And so I'll move my stop to maybe 7 ticks or 8 ticks or whatever. So, and like I said, I don't want to get into stop loss here. We will cover stop loss again, as this course is a rolling course. We're always covering stuff, but you've got the videos for that. But getting back to this here, so the 11% is an area where the market tends to retrace a lot, or the 23 or the 38. But if it's a bearish market, if that market is coming down, right, and you've got a strong area here, at the very least, probability-wise, it's going to do a correction to the 11% before it continues downwards. And that's why Ebony rightfully said, exit out at the 11%. Any questions on that? And Chris Holloman, that's specifically for you. Does that make sense? I know you just started, Chris, and don't worry, it's going to make total sense. But any questions on that?
No, it was clear. Thank you.
Okay, awesome. Anyone else?
Do you use trailing stop loss, Amar?
Trailing stop loss is something I do when I'm in profit and I have a runner specifically. So if I'm in a trade and I've got a runner up there, then I will make sure I've taken profits here already. I will put my stop loss somewhere here. And then when it moves to the next level, I'll put my stop loss somewhere here. But I'm using Fibonacci's too, because I want to see what's happening. You know, I've got a memory line here, so I might put my stop loss below that point. I'm already making money. And it all depends. Was it a strong thing? So on Friday, I knew if it hit that memory line from July, right, which was a solid memory line versus, yeah, this is a memory line here, but it's off the 10-second chart. It's not going to be as strong. But a memory line where the market went up and tanked on July, that's a strong memory line. I might have my take profit or my trailing stop loss just below that area. And you guys will get a sense of this as you trade. Did I answer your question?
Yes, thank you.
Okay, great. Okay, let's look at my Tesla. I'm going to look at Tesla here and show you guys what I mean. So with my Tesla trade, this area right here, I had a lot of confirmations. that this market was going to turn around. So I was excited. I was jacked. I was like, okay, great. I'm going to take advantage. So I bought a call that expires March 7th. You know, right here, I was excited when it started to go because I bought it right in that area. When it started to go in my direction, let me open it up a little bit. When it came down and it started to go in my direction, I was like, yeah, great. And then wonk, wonk. It's like, oh man. But I did not panic because I knew that I had time with this option. And so what I did was, among other things, I went and looked at where could it potentially come down to. And you can see this pink line here, right? Just below it, I've got sell Tesla option. I had a stop loss that says if it goes below that line, I'm out. Now, why would I do that? Well, a couple of things. If you look to the past, look at that, the good old fashioned
Memory lines.
yeah, twice. So I said, okay, if it hits that memory line, chances are it's going to bounce off of it. And I had the S&P futures, you know, going up. So there was a bunch of things I was looking at. I didn't panic. I did not panic. And one of my students actually took that trade and they were panicking. And I had to remind them, you know, the option, we paid $1,200 for that option. And I had to remind them, listen, you pay $1,200. That's the most you're going to lose. And this student actually makes a lot of money. I'm not going to say who they are, but he was panicking because he doesn't know options, but he wanted to learn it and he got it all set up. I told him what I was doing. I told him why I was doing it. And he said, okay, that makes total sense. But he started to panic. He's like, I think we should get out. I said, listen, do what you want. This is your money, but I'm telling you what I'm going to do. I'm not selling at the bottom, not when we have a Fibonacci, a pink Fibonacci line, and a memory line in that area. There's no way I'm taking that trade. For me, I also went and I used the Fibonacci this way. I went to the top here and I said, if the market does come down to that area, and since this will be the area where I'm going to say I am out of the market, then I'm going to look to see where this market could potentially go back to. And even if I just break even or I take a smaller loss, this is the point. And that's why I did not exit out on Friday. I do believe it at the very least, it's going to go here. I still think it's going to go to the 23. I mean, you know, look how much of a beating this thing has taken, right? Elon has been, a lot of his customers were very liberal. And because Elon is more, well, he's still a liberal, but he's aligned himself with a conservative president. And this is not a political conversation, guys. This is just what's so. I don't care who you vote for or whatever. I don't care whether you like Elon or not. We're here to make money. But a lot of his customers were liberals, you know, the green energy, and whether you believe in climate change or not, once again, that's irrelevant. But they supported him. They bought his car. And now they're dumping it and selling it. He's got a lot of negative press. And so I can see why that's happening. But I've also learned something. Do not ever bet against Elon Musk. So that was one of the reasons I decided, you know what, whether I like the guy or not, that's irrelevant. And so that's why I am still in this trade. But I used that 11% Fibonacci line this way. I didn't necessarily come down to that line. I know that's what I said originally, but that was part of my analysis. I use this Fibonacci by saying, if I put my 11% in the area where, right in this area with the brick wall, okay? This is my brick wall area. If I aligned my 11% in that brick wall area, where does it hit? And when it hit that area, I said, okay, at the very least, I have confirmation that I've got these memory lines. I have that pink Fibonacci line. I know you can barely see it. In fact, why don't I change it so that you can, there. Okay. So I got the pink Fibonacci line there. And when I aligned that 11%, now this was before the market. This market had not come to that area. This market was around here. So it did not do what it did here. And so I just said, at the very least, I'm going to get back to breaking even. So the market was around here going against me. And I'm like, oh, man, I still believe in this stock. And more importantly, right, I didn't want to use hope. I hope it goes up. You never want to use hope, guys. No hope. Hope is not a strategy. You're going to use the math to decide, okay, where shall I get out? Where shall I take profit and all that stuff? So once I anchored at 11, I had it down here and I said, okay, at the very least, if it comes there to that area, chances are it's going to come here. Now, just imagine, and for me, that was my break-even point. So why am I bringing this up? Because, so forget these strong lines, the memory line and the pink Fibonacci. Let's say this area didn't exist for me, and the next line was this yellow line, and it started to go against me. If I project this to that area, my 11% is here, well below my break-even. This is my brick wall. If this market continues downwards, right, I'm going to take a loss, assuming I'm getting out at the very least at the 11%. I'm going to take a loss. And so that would mean I'm out of this trade. I am not going to take this trade because the difference between my brick wall and that 11% is too great. And I would have exited out of the trade. Does that make sense? So in other words, how I would have used this, forget this area existed. I just went and say, okay, my brick wall is in that area. And if it goes past this area, I am out of the trade because I can no longer, at the very least, break even over the next 7 days. Even though, as you can see, Tesla loves to do craziness. Look at this jump. Look at this jump.
So did you end up buying another option at that level, or did you just predicted that it was coming back up?
I did not. That would have been the smart thing to do. The smart thing to do. No, honestly, Brian, you make the thing, but I did not. When it came down, I'll tell you what happened. When it came down and it started doing that, the S&P was still bearish. And because it was bearish, I thought it still has a little bit room to go. When it started to come down like this, it was like, oh, great, it's going to come down. It's going to come down to this area and I'll jump in. I should have looked to this area, which I did not. That, speaking of memory line, an almost perfect hit of that memory line. You guys are getting great information on memory line. I think I might actually save this video and put it with the other videos. This is a good webinar for you guys. But to answer your question, yeah, I was hoping that it would come down and I should have known better. You know, hope is not a strategy. Rather than trying to squeeze every ounce of blood, right? I should have just jumped in and taken the damn trade because that would have been a lot of money for me. That would have probably been like, I don't know, maybe $1,500 profit from a $1,200 option, or at least $1,000 profit. I'm guessing at this, but looking at how much it went up, you know, $20, that would have been a great trade. And so I would have been laughing because now my other trade that I was taking a tiny bit of loss on. And by the way, that is a strategy, what we're talking about here. When that goes against you, don't panic. You want to make sure and buy enough time, number one. And if it does go against you and you've got money in your account, buy it up. And then I would have had a tiny stop loss on this one, on the second call option. And then if it starts to go against me, I would have said, okay, I'm exiting out both of them. And then I would have waited. I would have gone and licked my wounds, right? Because no one likes losing. And I would have said, okay, let me go grab a coffee and come back and see, do I have a line here to jump in?